Good morning and welcome to Killik & Co.'s Market Update. We'll start this week with corporate news and the first quarter sales report from luxury goods conglomerate LVMH. LVMH is the largest company within the luxury goods sector and home to some of the world's most prestigious brands including Louis Vuitton, Christian Dior, Hennessy Cognac and most recently Tiffany & Co. after it completed the acquisition of the US jeweller earlier this year. The group's results were extremely strong, with overall sales increasing 30% in the first 3 months of the year compared to the same period in 2020. Sales for each of LVMH's 5 divisions were stronger than consensus estimates, while 3 of the 5 divisions reported sales that were stronger than in the first quarter of 2019, which of course was before the pandemic began. The standout performance came from the group's largest division, fashion and leather goods. Sales in the division rose 52% year on year, with strong performance from Louis Vuitton supported, according to management, by its very strong digital capabilities, which were critical as stores remain closed in certain geographies. Despite this, management stated that they remain firm believers in stores, arguing that it is difficult to replicate the customer experience online, and that they see digital complementing rather than replacing the physical experience in the future. SPACs, or Special Purpose Acquisition Companies, have featured heavily in the financial press this year. Commonly referred to as blank cheque companies, SPACs are companies that have no commercial operations, but that are set up in order to raise funds through initial public offerings, which are then used to acquire businesses. They have seen a boom in 2021, with the number of SPAC IPOs already surpassing the number of listings in 2020, and this week saw the largest SPAC deal so far, with Singapore-based tech company Grab announcing that it will merge with a SPAC launched by US-based tech investor Ultimate Capital in a deal which values the business at close to $40 billion. Grab was founded in 2012 and operates predominantly in Southeast Asia. It began life as a ride-hailing app, similar to Uber, but has evolved into a super app, offering not just rides but also food and grocery delivery and financial services. The company is loss-making. Its investor presentation shows that it made a $0.8 billion loss in 2020 at an EBITDA level, but it is growing rapidly. The company itself forecasts its revenues to grow at a 40% compound annual growth rate over the next 3 years and for it to break even in 2023. Its merger with the Ultimate SPAC will see it listed in the US on the Nasdaq. Finally, one of the main risks to equity markets currently is considered to be the risk of rising inflation. In the US, this week saw the release of CPI data for March. CPI measures the change in the price of a basket of goods and services. The index rose 0.6% in March, the largest monthly increase in almost 9 years. Over the last 12 months, inflation rose 2.6%, which was above consensus estimates. There is considerable debate as to whether this recent increase in prices is temporary in nature, or whether it is the start of a longer-term trend of rising inflation, something which would pose not just a risk to equity market valuations, but to bond market valuations as well. Looking through March's CPI print, we would note that the increase year on year comes in part due to so-called base effects. That is, that inflation actually declined in March of 2020 as the spread of the COVID-19 pandemic began, and as the failure of the OPEC Plus group to agree to supply cuts saw a sharp decline in the price of oil. Additionally, there are some potential one-off effects in the latest CPI print, such as supply chain disruptions that have had an upward impact on prices, and the impact of Joe Biden's fiscal stimulus package. Turning now to the week ahead, first quarter earnings season is continuing to gather pace, with results due from IBM, Johnson & Johnson and Abbott Labs, amongst several others. That's it from us this week. Thanks very much for listening. I hope you have a great weekend and we'll be back next Friday.